Hi everyone, today is May 6th, first week of new month. Let's see BTC to start with at 4 hours. I have hidden all the drawings for clarity and turn on the line chart to see the current price chart, hiding all the spikes, basically lows and highs. And I'm trying to see what it's trying to do here. So when you look at 4 hours and focusing on this zone, from BTC. This is a recent low, we can say. This was a major drop, then a recent low. You can see the double retest of this low as well, tiny one, and a good bounce. Then came down, but not quite deep, and then again tried to break above this level. Wow, it just dropped my trend line below trend line. Interesting. Anyways, yeah, it's dropping while we're going through this one. We have a couple of more. We have Nishant and Team as well. Okay. Okay, so this low is critical, as we know. Then a good bounce, another drop, but not quite deep enough from a closing point of view. Then another attempts, and we can see this level becomes a resistance. There was another drop, but not quite deep enough. We can say this is again the same level as this, and then steady rise. During this, we had a lot of things like Fed decision, ECB decisions, and so on. And now we are here on 4 hours, right, on time frame. This is where we are. So it's dropping. 3% is definitely not good. From, I mean, not something we would like to see. However, when you look at the chart, uh, it's not that horrible because it's here. When it is a problem, when it breaks this level, May 1st low or closing, I would say, and ultimately 27K. So still there are two milestones where we can say 27,700 or 800 zone, and then 27,000. Unless these levels are broken, the BTC is okay. And then we can simply say that this is just part of consolidation. As you know, it doesn't move up every day, and I explained that there are downturn, downtrend, uptrend, and then there is consolidation phase. So when we zoom out, now I'll switch to 12 hours. I'll switch to 12 hours, and this was one ugly drop, I would say, an ultimate retest of the breakout level or point of rejection. I have, yeah, and then, but this was consolidation phase. This was out kind of ugly move, you can say, one exception, but it was for a brief time, and then a quick recovery. Now we have similar kind of um, consolidation. Of course, the shape is different. This is more inverted in a nature. This is like a consolidation and then a U and then a consolidation and a drop. Probably it could have gone up, but this was something odd. Um, yeah, some like a character which was not part of the play, you may say, and then disappeared. So this is, anyway, it's a reality, so we cannot ignore it, but we can say this was the upside move, consolidation, another move on the upside, higher high with respect to this top, and then consolidation, and then, as I said, this is more like an inverted pattern. This is like, I would not say head and shoulder by any mean. This is totally deformed pattern. So this is no pattern. There is no pattern. Uh, it is more expanding pattern rather than deform. So expanding in a way, if you draw a line, then you get this point. If you extend, then you get this one, and then you expand this one, then you touch this point and this point. This is more expanding pattern. So in like this, like this, and all the way here, more expanding. Similarly, it is, but not expanding in a same way right now, because the angle is little different. It's like a beam or a torch, however you want to visualize it. When this is this strong magnet, it doesn't let me expand. Okay, so this is how it is right now. So this is just to give you an idea that this is just to give you an idea that um, this is consolidation phase. The consolidation could happen in different patterns. It could be like, for example, I'll just draw on the side, upside move, and then zigzag. When you see this kind of a consolidation, we call flag pattern. Why? Because there is kind of flag shape pattern. This is flag pattern, right? You can read more about it. I'm just giving you a few examples here. And then another consolidation where it could be a little different. Yeah. So in this case, this is more like, this is symmetrical triangle, or yeah, like this. This is also bullish pattern, correct? And the third flavor is this one, where here you see the consolidation narrows down. Here the consolidation is more horizontal, like it touches the upper bound and a lower bound. And here the consolidation is more expanding in nature, means it's totally opposite than this one, where this contracts and this expands. Right? So you now you know the pattern. So that's the pattern we are seeing here. So I can remove this. Yeah, so here it's right now the line is here because the edges are here. In case, just in case, if this goes down and goes below, then this angle could change. But again, angle could change, but it won't um it would still be consolidation. Like here, it went all the way here, not just limited to this one, but extended to this one. And we can say that it expanded the pattern, but not quite killed this move. This move and but by the way, this was the this was the limit. So for this one, the limit could be 25K. But here I purposefully mentioned risk below this because it doesn't make sense if it goes down below 25K in case. I'm not saying it's going, just in case. Then still it's kind of safe in a way. It would not jeopardize the recovery. That's just hypothetical scenario because I'm talking about pattern, and I'm talking about this kind of ugly move where it makes new low with respect to this one and comes down still up to 25K. I'm just saying is not an issue. It's not acceptable to many, but technically it would not break this. And you can expand your thoughts, and then you can draw one line and say, okay, what if I draw this trend line? And then if it, let's say hypothetically it continues to going down, then it gives me even 23K, 24K is the my limit, right? Is my limit. See, the ultimate limit is this one. Ultimate limit is 20K, means you this is like a trend level support, you can say. So what I'm highlighting is right now 27,150 is my limit. Personally, let's say I'm saying why, because I can always re-enter at a lower level if in case it goes down. I'm talking bearish scenario purposefully, so it could help in planning. So, and my thought process is, because there's no single support, there are always multiple supports, and different user or traders would think differently, because everyone has different risk appetite, and everybody would be sitting at different profit level, or maybe at a breakdown level. So that's why one support may not work for everyone, and technically there are always multiple supports. But stop loss point of view, the stop loss, as I always say, are personal. That those are personal. Some could have very close by, some could have lower. Very personal. Why it is personal? Because entry level is very individual, right? If the entry level is very close, then the deeper stop loss could end up with a big loss. But if the entry level is earlier, but that pretty lower level, then my tolerance is naturally higher, or tolerance is bigger basically. And that's what I mentioned in the month of December. If you notice, I said the trend is likely to start, and those who starts and early will have high tolerance and in the future. And that this is what we're seeing. For those who enter in December and got this big, I mean, could face this without fear, because because even with this level, the trade would be in profit. When it goes higher, the comfort level goes up even further. And in that case, even this kind of a drop is nothing for that individual. Even it comes down to this 23K, it's nothing. But those who have faced 25K, this or 20K, sorry, close to 19K, 20K range, this is nothing. So that's my point, that those who follow the trend, follow the swing, and not try to do in and out unnecessarily unless it is required, they have benefit. There are always pros and cons, right? Those who think that they are able to in and out every move, and then they can predict market, if they're able to do well, and good for them. But not everybody is like that. Most of the people would like to stick with the trend, because it is not possible to catch in each and every drop all the times, because this is 24/7 market. Somebody sleeping in Japan at this moment cannot handle any drop, if there is a quick drop, something like that. So that's the reality of crypto trading. That's why I recently posted on the best practices why swing trading is so important. And just to clarify, the swing trading is not necessarily that only those who can enjoy who entered in December. There are milestones like this one. And if this is the low, then this can be the beginning of a new leg, or another leg on the upside. Like if this, let's say, because this is just consolidation, as you could see, and then another leg on the upside. So the entry could be here. That's the best entry. The second best entry is this one. Third best entry is here when it dropped. So it's not that those who entered December only had an upper hand. Of course, they are at the best position, but this is second best. So each drop is a potential opportunity if it follows by a nice bounce, right? Like this one, a nice bounce, and this is also decent bounce. Why? Because this is away from the low. And as I said, and we would like this to happen. And if that happens, we can say that those who enter somewhere here, even here, are sitting on profit. And then if I fast forward even further, taking further, see, this is going to go through some consolidation and something like this. It's not going to go up in straight line, right? Something like this could happen. Now here the pattern could be different, like it could come down, and then here it could be symmetrical triangle or channel, as I mentioned, or flag pattern that I mentioned, and goes up. So when the wave progresses, you are going to see milestones like this, milestone like this, milestone like this, where the pattern could be different, expanding pattern, symmetrical triangle, flag pattern. What is important here is when it retraces, means when it corrects, how deep it goes, and the TA can measure and tell. So call like this is so important, where my focus is risk. Remember, my focus is risk, as I'm always mentioned. So maybe I talk more about downside scenario more. It is not because I'm pessimistic. It is more because I'm cautious. Some people don't think about, let's say, when they have food, they don't think about food, what kind of food. For them, taste matters. Some people have a balanced diet, like they enjoy some sugary item, tasty item, but fried item, but also they know what is the limit. And some people, so we talk about both. We talk about upside move like also, but we my focus more on spreading awareness that this is, if you eat oily food, this would happen like dietitians. If you put sugary food and if you have condition, then this could happen and so on. So I focus on preventions. I focus on potential risk. So if those are taken care, then the health remain good, probabilistically. Similarly, in trading, the similar thing. When it is consolidating, you need to know the boundaries, supports which I provide. When it is going down, you need to know the support and what is critical support, what is trend level support. These are the things, because supports are many. So in this call, I am highlighting few things, and every week I update you. So knowledge is refreshed, because what I'm saying, the next week could be different, next to next week could be different. So every week, what you do is you get upgrade. So version upgrade, right? Because we have to forget the past, reset and baseline every week, and see and have a look from a, I mean, analyze from a fresh look, a recent history, like this week's price action, recent events, upcoming events, not far-fetched in the future, but important ones. Like we knew that the Fed event, the FOMC meeting was very important. We talked about last week, and then this week we had that event, super important. We saw what happened after that, and there is effect of it for a few days, because money moves here and there. So there are always some effects that we see for a week or so, sometime couple of days, sometime more, and so on. But technically speaking, I focus on what are the key levels, what are the ultimate levels, support level, when it is progressing. So now you can clearly see how it is progressing, that upside move, then expanded pattern, upside move, another expanding pattern. Let's say this is this, and then this continues and could end up with any pattern. We don't know that, nobody knows that, right? It doesn't matter. But then the focus is always that if it is retracing, how deep it retraces. Does would it go all the way here, all the way here? And we'll see. We don't have to speculate that, right? We have to see. What we need to know is what could happen and what is my plan. So coming back my point, that the support level can be different, and it's very individual. So I think you are with me, and hope you would agree on my point, that one you cannot ask someone hey, what is your support level? Never ask that question because it's so individual. Okay, so this is my support, which I think because it with respect to the recent major correction within this pattern, like here I would have support. This is the support, and and in that case, I explain how one can re-enter. So probably I don't have to repeat it. But if let's say hypothetically, uh, this was my support level or stop loss, I'm stopped out because this is my point of reference. I don't have to worry about it. I had called out support here as well, as you know, but just in case, if even if I don't call out, let's say, if it happens in blink of a second, I mean, very short span where I'm offline, then you still have my guidelines where it's not about taking profit on perfect top or taking entry at a perfect bottom. That's not the idea. Reasonably, one should be able to re-enter and join back the trend. That's the whole idea. And in this case, this is the perfect level. Fine. If it is not, then above this is the perfect. So if one is stopped out below this support level, which is my plan, then, and if there is a sharp bounce like this, I can re-enter above this. Very simple. So in that case, maybe I end up paying more fees. Maybe I'm end up entering with little higher level, which is fine. You have to manage this. So that has to be stopped. And the level was not that deep and it is bouncing. That means the trend is resuming. So I don't want to be outside. So this is simple risk management. So now if I do the same for here, if this is my stop loss, then let's say if it goes below, I don't care, I'm stopped out, and then I'll look for support and a bounce followed by the support, and then I can try to re-enter where I could have re-entered here similarly, just in case if it drops. Not a problem if this is missed out, it goes above. I can always re-enter here. Not a problem, right? So I think this is also clear. And so these are simple things. There is absolutely no need to panic, right? So because re-entry, but so there are two aspects of this one risk management. One is having stop loss, right? And I explained that many times, how you calculate and thinking about position, size of the position and so on before buying. So that I'm not talking about that. I'm talking about one when I'm stopped out, or so that's the first aspect. And the second aspect is, okay, now when should I re-enter? So that's what I'm talking about, right? Sizing happens before buying, not while when you stop out, because you are already in trade. So I would not think about sizing them, right? Um, so all these levels, exit level, if you don't know exit level now for any coin that you have, that's a crime in a way. Means you're not a trader. You're not a trader, you are a dreamer. Why I'm saying dreamer means you are assuming that it is not going to happen. It is going to go up only. So trader is simply the one who thinks about risk, not just about opportunity. It's not about good trader or bad trader. One is a trader or no trader, in my point of view. So trader is a professional who thinks about risk as well as opportunity, like both keep and exactly aware of the exit point, re-entry point, size before buying, and so on, right? So we we call them traders. Other are speculators, dreamers, right? Not at all traders. So there is no good trader or bad trader. Trader must have all essential properties or skills. Then only we can say that person is a trader. Okay, so coming back to price action. So I hope this risk management and re-entry aspect is clear. Also, I talked about continuation patterns. And then, so there is going to be zigzag line consolidation phase. It's not going to be, and I purposefully open the line chart because then I can remove the spikes from the lows and highs, and you focus on only closing prices. Because when you turn on the line mode here, you only see the closing price, and that gives you clarity, more clarity. Of course, you have to reference the lows and highs and so on, but many people exit on closing, and that is essential many times. And I mean, if you don't? I mean, if you don't, then you may become victim of spikes, a lot of spike. But in crypto, there's one more downside. If you wait for the closing, sometime you have to pay little higher price for, because you waited for that candle to be closed. Yeah, so there are pros and cons. There is no perfect. It is, um, but there is one way that you can handle both. So let me talk about that. But one of the best practices that I believe in, which is simple, and I had explained earlier, but let me repeat it. So one can have multiple exit points. If you have just one exit point, and if you rely on real time, then you may get stopped out, and then price goes up and you feel that I got fooled by the market and FOMO and so on. Okay, if you if you plan on closing crypto, unlike stocks which do not move that much, in crypto, if you just wait for closing, the drop could be so severe that it could end up with huge drawdown, and then waiting for closing becomes expensive. So there are pros and cons. But if one has multiple stop outs, break at different levels, then actually work on closing with multiple stops out works pretty well. Or, my bad, work with the real time with multiple stops out pretty well. Because if I have, let's say hypothetically, I put my stop here, I'll just change the color to red. This is a hypothetical. Why? Because, okay, this is my first stop out. Then I can put another one. Then I can put another one. Then I can, let's say, put this is my trend level. Then I can have one more here. And the last one would be here. Now I am 100% in BTC, for an example. I'm in profit. If I just have one, if it goes down and goes up, then I would FOMO, and I may lose and unnecessarily, because this is so close. If I have the same thing, if I have only one here, but I have here and here as well, then I book profit, and when I re-enter here, actually I end up adding more. And same time, if it bounces. Similarly, if it, let's say, but if it continues going down without bounce, if it continues to go down, then I book profit here, 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 and I don't care from where it bounces. It here drops, stops, it stops out, and let's say somewhere here it stops and then starts going up. Well, I would have cash from this stop out, cash from this stop out, cash from this stop out, that I could utilize that stop either at the same level, or at this level. It's my choice. It's a planning thing. Yeah. So you have now different methods that I'm sharing, best practices. Most of the people have single stop out, and I believe that that's not a good idea. From my personal preference point of view, that's not a good idea. So having multiple stop out. So, and then you decide what is the percentage. There are also choices. 20%, 20%, 20%, 10%, so on. So you want to load heavy on the beginning, or 10%, 20%, 30%, and you can ramp up like that. That's also choice. And you know why, right? So these are the things. So you can decide, but multiple exit point makes total sense, because when it is falling, one cannot say this is the point from where it will recover. Like here, it didn't recover from here, didn't recover from here, it recovered from here. So if I had stop out here, stop out here, stop out somewhere in middle, let's say on this one, then I would have cash in hand for me to buy. So that's the advantage. So this is the strategy which will take care even for the spikes. Now think about spike where I have a tiny stop out here. I have other stop out here down the line. But let's say it drops up to this one and then bounces quickly. Or it drops below 27150, let's say some around 27K, and then bounces quickly. Again, I'm not 100% out. So I'm still on trade, and then I can decide what to do when it bounces. Compared to those who do in and out 100%, ended up paying a lot of fees, ended up with slippage when the volume is low, and it's not easy to do 100% in and out, not at all. So these are best practices. So multiple stops actually reduces losses, allow you to have some cash in hand, and so on. So I hope this kind of guidelines or best practices, I would say, would help you managing risk in an effective manner. See, these many people talk about signals and all. I believe if unless one understands sizing, risk management, all these techniques, I don't think one can be, good trader. It is impossible. And my effort, this is educational hub, is I don't call signal channel, because I believe that I'm truly providing education in a true sense. Otherwise, it's just so easy to make a call, and not to spend time on aspects like this. It's so easy and convenient. It doesn't take time. But I know that doing only that is not enough. And I think we have some long time supporters for that reason. I'm so grateful that whatever I'm contributing, I'm getting rewards with their support for a long time. And I see that so many of you are here for more than 2 years, up to 3 years. And the only reason I see is because, of course, the involvement, mutual involvement. Of course, you are interested in trading, and the same time, here you get that education and that kind of care, in indirect way. So I believe that it's a win-win for both of us from a relationship point of view, not just business point of view, but also relationship point of view. So that way we are unique in a way that the engagement is pretty strong. The bonding is pretty strong. Even someone leaves, person remembers, and so many people returns back. So even if they leave, not because they are kind of hurt, or mm, they were not satisfied, or yeah, they would leave for some different reasons. So many feedback I get, and that actually, you would be wondering why I'm involved. One one, you can say simply say I'm passionate about my work, but it's not just passion, it's also because the feedback I get and the warmth that I get. So it's a mix of many things. And that motivates me to continue doing what I'm doing without any break. Yeah, so coming back to our TA stuff, um, this drop is 3% is of course not something good from an intraday movement point of view, but not it's not going to hurt the momentum, the trend. It's tiny thing. This drop is tiny thing in this overall trend that we talked about. So those who are panicking, I hope they would not. The another thing that I would like to add, not financial advice, but that why BTC is so important, that you can see when BTC drops, it doesn't drop too much like in double digit, where the altcoin drop in double digit or in multiple of Bitcoin drop like 2x, 3x, 4x, or even more. So from the stability point of view, it's so important that BTC is required. Of course, it's a relative term. The stability is a relative term. What I'm saying is those who just have altcoin in the portfolio compared to those who have all plus Bitcoin. So the Bitcoin offers stability. So it's so essential. Anyways, that's about portfolio management. See, I'm not tagging that but when you attend call, you end up getting something on risk management, sizing, portfolio management, selection of coin, volatility, or so many different aspects. So I don't have video talking just about this, but what I do is take the real scenario and spontaneously talk about different aspects of trading with examples, live examples. And I prefer that format. Okay. Yeah, so it has to go up because there is nothing wrong. That's the bottom line. And okay, let me remove these red lines because these were for examples. These are not supports in a true sense. And why don't have other support line? Because it's here. If it comes down, then I'll add more. So I don't want to add unless we have a scenario. The scenario is this. And as I said, this retracement could be deeper. This is just indicative pattern. The idea is this: there will be consolidation with some correction at a higher level. It could be at 33K, it could be at 34K. We'll talk about it. So you don't have to worry about that because I'll be providing update on it. What is the takeaway here on BTC front is the trend, the recovery trend is intact. Not just intact, but strong. So anyone who is bearish, I don't know why. Okay. And there are other factors which I'll talk about. Of course, there are some events which would jitter the market, but essentially you have to see whether the trend is deviated or not. The answer is no, trend is not deviated. The recovery trend is not deviated. So absolutely no need to think about 10K or whatever crazy numbers on the downside. And we know we are open for everything, but I'm driven by the levels. So I would not call myself as bullish or bearish. I don't like those titles. I am analyst and I'm realist. That's what I would say. So I would prefer these two titles rather than calling myself a bear or bull or something like that. Because I try to be objective all the times. And I force myself to be like that, in fact. I contradict myself. So I have to run two roles in my, I contradict myself. If I think that right now the direction is up, then I contradict, prove me that why. So I don't need other person. I myself contradict. And then I have to provide enough justification to say for today, for this week, I'm saying that it's heading up. And then I would change if it goes other way around. So that's for Bitcoin. We can, so I think let's zoom out. On one day, I don't think it would be different. Yeah, it's not different. Weekly, we are referring other Bitstamp chart. Now, again, without drawing only closing price line chart, I'm doing a little different today because sometimes it is important that we look at the line chart for clarity, as I mentioned. And so so weekly recovery trend is consolidation. So here you can clearly see that this is consolidation zone. You don't care about what pattern here. It's just resistance. The resistance zone. Similarly, this is different resistance zone. The shape is not going to be the same. Right here, it was different. Here it was deeper, but still resistance zone. Here it's tiny, like nothing happened. This was different, and this was different. Now, TA knows that this is something bad compared to this one. So that's where you are here, and that's the biggest benefit that you get. If something like this is forming, I would detect, I believe, right? So far, so good. We have detected major tops like this. This one, even this one. When I was with opposite move, I said, this is not good enough. And the social media was so bullish from here because for a reason, because it didn't break the trend line. So they were extremely bullish. And it totally makes sense. I said, okay, I'm not saying I'm not bullish or bearish, as I said, but this is not enough. I kept on saying, this is not enough. This is my required level and so on. And it never break above that required level. So it's so important. And here I would say this is important. I mentioned about that. I'm not calling uptrend. Remember, I'm calling recovery trend. And I explained last week, so you can refer my video last week for a reason. The recovery trend would turn into uptrend. Okay. So positive consolidation, tiny. Look at the swing. This is so tiny. Why, with respect to this recovery trend, why anyone would be worried with this tiny, and why there is no sign of weakness? So, and I have no clue why anyone would be thinking about 10K or whatever lower level. Absolutely nothing that I see here. In fact, you don't need to be TA. Think about it. And I always believe in present, as I said, with a recent past in mind. If it goes down, we'll take care because we have risk management in hand. Yes, but why to spoil something why to spoil the present for something hypothetical, something which hasn't happened? That's my argument. So that's why there is absolutely no risk in the present. Okay. Let's turn on. And zone, I don't have to repeat. And this is we expect it to continue like this, and then one fine day we'll say there we are heading for new all-time high, right? Now I hope this is just a scenario. Don't think this is what is happening, right? I remove the red line to avoid any confusion. This is the direction, just to clarify. This is a faint line, not bolder one. This is bolder one. Or maybe I can make it solid if there is confusion. But then I would not go all the way. That's why I kept the dotted line actually for a reason, but not like dashed line, bolder one. This one we can put a solid line. Okay, this makes sense, but we cannot say about all this. So that's why it makes sense. I screwed up the dot line thing like this. So this has a higher probability or highest probability. That's why it's solid line indicating. Then this has then a probable outcome after some correction. So this could be like, it could be like this. This, I'm not so worried about shape and timeline at this moment on this one. This is more practical. And this retracement could be deeper, we don't know. But for now, this much. Okay. Anyway, so you got the gist. And this has to be kept because why? Because this is recovery phase. This is not out of the woods yet. Okay, that's why. So and but this is very thin line. I mean, if I don't want to be too, but this was bold line, bold red line. So this is the trend. Oops. And then this is the green level, right? This is what is happening. This is the right depiction. This is the trend. This is nice recovery, right? And if it starts retracing and breaks and comes under war, then this will become stronger, right? So that's how pictorially, visually we are depicting, because when I put arrows on both sides, how would you know what is stronger side? So that's why. So from a zoomed out point of view, this is stronger side because there's still downtrend going on, right? And but this is bold green level indicating positive recovery. This is positive upside move that we are looking forward at this moment, and then potential path. And if this path becomes the reality, then this becomes solid line. If when this path becomes reality, and in that case, when that happens, this goes away. Then I'll remove this, because then we are saying we have established the uptrend. But right now, I cannot remove it. So you got it, right? This is the downtrend. Within that, we are having counter trend. We call recovery trend. And I'll call out when uptrend begins, then remove this one. So I hope this is clear. So we are not confused at all. We know what side we are. But we talk about scenarios, and for scenarios, I have to have those drawings. So I hope this is clear. Now let's look at DXY. So DXY is screwed. From a closing point of view, you won't see attempts. On a candle chart, and that's the beauty of the closing line chart. There are attempts. So of course, this has more information indicating how many times it attempted. And as I mentioned, it could attempt even more. In fact, it did. But not high enough, which could break. So this is a magical, white line is a magical line, so to speak. Amazing, isn't it so? Let me zoom in so you would see it. Amazing. So it is going down. Now, technically the support is not broken, but probabilistically this has to be broken. So that's our bias in a way. So that's why this has higher probability. So we can make it bolder. Below this, remember, below this, it becomes bolder, of course, then all becomes obvious, not necessarily all the way down, maybe we'll see. And then we'll just indicate that it'll go down. Otherwise, somebody think that he said, oh, $95. That's not what I mean. This simply mean that heading, I mean, it's going down. That's what I mean. So it has to do a lot of things. DXY has to do a lot of things for it to recover, and it is looking extremely weak. So indirectly, you can say that means it is helpful for BTC. Remember, it's not always the opposite every day. The focus is always trend. So weakness of DXY. So we have to focus on the key areas, key levels, and then weakness and strength. So is DXY strong? Answer is no, it's weak on a weekly time frame. That means it is helpful. And this much of information is good enough. No need to go deeper at a micro level, in my opinion. And when you look at line chart, it clearly shows that it's going down. Right? So line chart we're using, so this is going down. 10-year US, this is holding up for a reason, because yeah, but still it's under pressure, but technically it's not broken. So we'll see. The market should decide the direction in a week or two in front for DXY support and all, right? And we'll come to know. So come next week, we'll have more clarity, because now the FOMC meeting is down the line. I mean, we have some weeks to go, so market will decide which way to see. Each FOMC meeting is like a major milestone or checkpoint, fundamentally speaking. Now, my analysis based on what I heard on a macroeconomic is this for this week is that 25 basis point hike was expected. It happened. Fed didn't give any clarity on the future rate hike. They clearly mentioned they're not planning to pause. So that's why market reacted a little negatively as well, but stock market was very bullish on Friday, stronger than the crypto market. The reason could be anything. The money may go into good asset, and then or I would say, I would not say good or bad, I would say concrete asset than speculated asset. So it is possible that money, and also Apple did well. Remember, Apple did well. Results were good, very positive. Payroll data was stronger, so that's a bit negative. From economy point of view, it's positive. From Fed's decision-making point of view, it's a little negative. But as I mentioned on info, that if the payroll data increases, productivity increases, inflation pressure it goes down, then that is actually a beneficial. So just looking at the payroll data, one should not think it's a negative event. I believe that's positive, because the core is stays. Inflation is still is high, 5.5, but it's not crazy like 8 and 9. So there is improvement. The rents have come down. The property market has cooled down. So and all these factors have lags. They have lags. And Fed, to me, is super aggressive. To me, they should pause, in my point of view, because they should allow market to see what the effect of what their action. We already seen the effect on small banks after a few months of after 1 year of hiking, or more than 1 year, 1.5 years of hiking, like 5 quarters. And now, if they continue like this, then we'll see other sectors getting affected. So I think they pause. I mean, they have knowledge and all this claim, but the market, I think, is looking for they haven't mentioned they'll pause, but I'm talking about the US market. I think they're likely to pause, because if they don't, they'll damage more than help, because it's a balance. I would prefer little higher inflation personally than a recession. So they have to think about it, and hope they would, because the rate hike is like, this is historical rate hike. Never happened in history, such a steep rate hike. And that was because they kept pumping and printing, and that's what happened. So they already damaged by putting a lot of money in the system. and now they're damaging by the so-called correction from their side. Their correction is actually mm, is has become a challenge. So it's not easy for them because they missed the opportunity in 20 during the COVID in 2020, 2021. They missed the opportunity. So in the catching game, they are now actually not able to handle the inflation pretty well, at the same time damaging economy. So if they don't, if they go aggressive, they'll bring in recession, not just that, and also crash the market. So I think what they do next is super important. 25 basis point was acceptable to market. So stock market was kind of okay, and it pumped on Friday. Thursday, they were down because a lot of thing happens, but Friday, it went up. Right. So next week is important for that reason, that now next week will, if the next week stock market goes up, then it'll give more confirmation, further confirmation that it wants to go up. Now, Bitcoin, I already explained, if the stock market does well, especially the tech stock, then the money will come into bit for speculative asset like Bitcoin as well. I have a very different view. I don't think Bitcoin will go up because banks are in crisis. Those are stupid ideas in my point of view. I respect those ideas, but for me, those are stupid ideas. So not in insulting, but if I don't want to use stupid, I would say I would defer it in a nice way if I had to use nice language. But I have opposite view basically. The and small bank crisis, they are making a big fuss of it. I think I mentioned on chatter as well. The big banks will become bigger. That's it. Money is not going out of the system. It's just going into money market and all the treasury, because who will give you 4%, 5% interest rate? Apple gives you 4%, and some money market gives you 3%, 4%. So who will give you without any doing anything? These interest rates are only seen in developing world. It is never seen. It was never in for decades. Nobody's seen this in last couple of decades. They had seen in 80s, like four decades ago. So nobody's seen this kind of high interest rate. So this is like a bonanza for some of the investors. So I would put my money like in some money market fund, and I'll just happily, because treasury funds are super safe and enjoy 3-4% interest rate. So that's what people are doing, and that's why the small banks are getting hurt, because they cannot afford higher interest rate. So the money definitely will go out. So the banks have no issues. People are misinterpreting the whole issue. The banks have no issues. Banks are not in trouble. Banks are in trouble because depositors are going away. So it's the other way around. Sometimes what happens, if the banks do not do well, then the depositor go away. This is different case. Here the depositors are going away. That's why banks are in trouble. See the difference. So here the victim is bank, but banks are a victim because they made bad decision investing in long-term treasury rather than keeping short-term treasury. So that's investment flaw, I would say. And yeah, the multiple factors. So without going into details, but I think this is good enough, because social media is, I think, spreading misinformation in my point of view. So the banks are not in trouble. The depositors are pushing them and causing this trouble, and only for small banks. Big banks are totally fine. So if big banks, top 10 banks, top 5 banks of the US are in trouble, then we can say we are in trouble in a true sense. And big banks are not in trouble. In fact, they'll acquire even more. And I gave one statistics that since 1980s, mid 80s, there were 14,000 banks in the US, now around 5,000 something. You can look at the Google, and you can go search by total number of banks in the US by year. And you will see that since mid 80s, number of banks have been declining for various reasons. This is nothing wrong. It's just a trend. Reasons could be different, but it's totally okay. What is not okay probably is big banks getting bigger, which is not good because it's about monopoly. monopoly, as you know. That's the only downside of it. Otherwise, there is no systematic risk that I see because of these things. Okay, dokie. So I covered Bitcoin in detail, risk management, re-entry styles, multiple stops, DXY, yields, banks related stuff, misinformation about banks are going down, Bitcoin will go up, crazy ideas, fanatic ideas, illusion people are in, those are have no clue. Anyways, so these are the points that I covered. I hope you find this session useful. Okay, then we'll look into altcoin, other swing coins. So I'll end here.